Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of more disparate signals on trade and international cooperation. First up, there's been a weak start in October to the traditional peak season for air cargo and the 12th consecutive month of year-on-year declines in freight volumes. They were down 3.8% globally and down 6.1% internationally in the Asia-Pacific region, which recorded the steepest decline. In the US, we get the non-farm payrolls report this weekend. Today, the precursor ADP report is out, and that isn't indicating strong jobs growth at all. But at least there was some. In today's report, the gain was the second lowest since 2010, and the factory sector got job losses. At 67,000, it was less than half analysts' expectations. Their expectations of 190,000 gain for non-farm payrolls report will no doubt now need to be sharply revised lower. This lower outlook is supported somewhat by the US service sector PMIs. The closely watched ISM one is lower at 53.9, a fall and below expectations. The internationally benchmarked market one records a more timid expansion, but it did pick up from October. In Canada, they had an official rate review, but there has been no change at 1.75%. They have inflation running at their target 2% level, even if the growth there is low and weakening. But they say they see signs of global growth stabilising. And good progress is being made at the OECD on the BEPS framework. But now the Americans are balking suddenly as they realise that many of their companies that have been not paying their fair share of tax, and they're starting to resist change. They don't want an erosion of long-standing international tax rules. On top of their very strong current account surplus, the Australian economy has posted annual growth of 1.7%, up from a decade low of 1.4% in the previous quarter, and confirming the RBA's assessment that their economy has passed a gentle turning point. And the Aussie banks are bracing for the RBNZ bank capital announcement later this morning. We will have full coverage. International equities are a little higher this morning, reversing some of yesterday's drop. Today, talk of background progress on the US-China trade talks is encouraging these markets. The S&P 500 is up 0.6% so far, following a 1.2% rise in most of Europe, but not in London. Yesterday, Asian markets were down more than 1% before the trade talk rumours started. And bond yields are volatile too. The US Treasury 10-year yield has reversed course again today and now back up to 1.78%, and that's an 8 basis points rise since this time yesterday. And gold is down $7 to $1,480 an ounce. And US oil prices are up strongly today at just on $58.50 a barrel. The Brent benchmark is just on $63.50 a barrel. These are rises of more than $2 a barrel and come as American crude oil inventories fell sharply. A surprisingly large decline in output in their domestic oil patches is having an international effect. And the Kiwi dollar is marginally higher today, now at 65.3 US cents. On the cross rates, we're now staying up at 95.3 Australian cents, and against the euro, we're unchanged at 59 euro cents. That puts the trade-weighted index at 70.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.